Well, here we are. It's been a while. Let me bring you up to date. 9 weeks ago, I had a heart attack and open heart surgery, and this past Friday was 9 weeks since that surgery. So I'm blessed because the Lord, it's amazing. I feel better now than I have felt for a long, long time, and I'm here. And I just wanted to jump back in here today and start a very, very important conversation. Uh, Again, I had 5 bypasses. When I went to the hospital that day, they admitted me and found that I had 5 arteries that were 75 to 100% blocked. And that was on Tuesday. And on Friday, they opened my chest up. And I can't thank them enough because, like I said, I feel better than I have felt for a long, long time. You know, in doing the podcasts, I have gotten away from some of the things that I was doing. I want to get away from political. Tomorrow's the big election, so we don't know what the world is going to look like in a few days because of the election tomorrow. But I will be surprised at the turnout, like many people will be. But I just think the turmoil after tomorrow went for a long, long time. I want to start a series of uh, podcasts talking about misleading information that the public is fed. And I want to add context to that in what is happening. You know, I titled today Life Insurance, the Tragedies of Life Insurance. And I could talk about lots of stories of people that wanted to buy life insurance, but their health would not allow them to buy it. They'd already waited too long, or their health had turned bad. But let me say this: that the information that the average person on the street is being fed is 99% incorrect. And I'm going to quantify that today. I don't like to provide estimate for people. But Dave Ramsey is one of the people that comes to my mind, and Dave Ramsey tells his followers that permanent whole life insurance, you should never own it. It is not good, and it's just a bad deal. And I'm going to say something to quantify that. In 99 point something percent of the Dave Ramsey is correct, because 99 point something percent of the life insurance product or the life insurance companies are in business to make money. So the advice they give you, they simply want to sell you a policy today. They want you to believe you need this stuff, and in reality, you don't need life insurance. If your spouse dies, you're not going to die a week later. However, financially, you might find yourself in a big struggle because life insurance done correctly provides value when it is most needed. And as I expand on that, let me share just some information. There are two kinds of life insurance companies. There are stockholder-owned corporations that are operated for a profit for the stockholders. Those companies sell product. They give advice that is misleading. It isn't always necessarily true, and may or may not be the best thing for you. The less than 1% of the companies, and today I equate out of 850 or so companies that are out there selling some kind of life insurance today, less than a dozen of them, in my mind, are actual mutual companies that are owned by policyholders that truly operate for the benefit of the policyholders. I have a policy that is 37, 38 years old. I've had it a long time. I've been in this business 49 years. So I have gone down the road. I've seen all of it. I have all these initials after my name. So I have gained a substantial education regarding the financial services industry. And these mutual companies, that policy that I've had for, I don't know, 37, 38 years, if I go back to the very first day that I bought that policy and come forward to today, and I look back at all the money that I put into that policy, the internal rate of return, so the equivalent I would have had to have made in a bank account or some investment or somewhere else to equal what I earned in that policy, depending on your tax bracket, would have to have been 6% or better, because my tax-free rate of return has accelerated and been above an average of 4.5% from the inception of that policy. Now, that's the internal rate of return, but there is also an external rate of return with life insurance, again, if it's done properly. And the external rate of return is, over the years, I have purchased automobiles by making a loan from the insurance company and using my insurance policy as collateral, while my loan is ongoing with the insurance company, and they have charged me an average of somewhere between 4.5% to 5.5% interest on that loan since the beginning of that policy. So right now, again, my internal rate of return did we do that? I don't know, but we'll bring it back. But over the last 38 years, how much money have I saved by not paying interest to the banks, or using my money and spending my actual money and losing the interest it could have earned at the same time? So we have to truly understand the internal rate of return and the external rate of return when it comes to life insurance. Now, young people, I meet with people of all ages, young couples, chronologically gifted folks, and that. So the circumstances that people are in dictate more of what kind of life insurance, how it should be set up, the amount. If I look at protection, protection we all need in our lives deals with liability, disability, and death. Life insurance policies today have long-term care benefits inside them. They have early death claim benefits. So if somebody is terminally ill, they have access to some of that death benefit before they pass away, all tax-free. Now, over my lifetime, if I accumulate a lot of life insurance that is permanent, okay, then in retirement, having a large amount of life insurance in place and having cash value, it allows me to actually retire and spend a little bit more money than I would have been allowed to spend had I not purchased the life insurance and provided that protection, cash value for emergencies, long-term care coverage, etc. Now, I'm not a negative against term insurance. I believe that I teach banking. My book, The Family Money Farm, going overhead right now, and Financial Mastery Coaching, those two books, you can get them free if you go to cfo-project.com, put in your email address. You can get both of those books for free, where I actually lay out the planning that is needed and required for people to find success. If I'm talking to a young family who is struggling to make a go of it, the type of life insurance they should be purchasing is a large amount of term life insurance, which would have a low cost, with the long range plan of being able to convert that term insurance to pieces of permanent cash value savings life insurance over time. So it's part of building the foundation, so to speak, of their home. But when people are married and start raising family, the most important thing about life insurance is having economic human life value covered. If you have a home and you have homeowners insurance, it's insured to replace the home should it burn down. I would wager that almost everybody has that type of insurance on their home. If you have disability insurance, you want to replace and be able to provide guaranteed as much of your annual income as possible. When it comes to life insurance, I want to make sure that my life is insured for my economic human life value. And I don't hear very many people talking about this today. And really, it's because they're selling policies. So many people I meet, and I would ask you out there, if you look at your life insurance policies and you have 50,000, you have 100,000, and that's what you purchased, then that's what the agent was selling that day. Or maybe you bought it at work, but there was no thought going into purchasing that policy that related in any way, shape, or form to economic human life value. So when I think of that, it's about doing it correctly. It isn't about the policy. It's number one is providing the protection needed for the family, and then eventually providing a means to save money that is not only guaranteed in the safest place on the planet, because the banks themselves put billions of dollars into these cash value policies at the approval of the Federal Reserve, because the Federal Reserve tells their member banks that this position using life insurance cash value has the lowest risk of failure or the lowest risk of loss of anything they could do with the money. So many banks use permanent life insurance to fund their employee benefits and or their tier one capital in the banks. We're going to continue this discussion. I'm going to cut it off because I've really given you a flood of information. Don't forget to go to cfo-project.com. There it is, going over right now. And I have this little thing on my ankles. I can't move my fingers right now because of something that happened during all of the medical stuff with my heart. But you can get both of those books, Family Money Farm and Financial Mastery Coaching, going overhead. You can get them for free. Simply go to cfo-project.com, put in your name and email address. You'll get a link to be able to download both of those books. Hey, folks, give me an opportunity to change the end of your movie. So many people are lost and have no way to figure it out. I can show you, and I have clients in 38 states, so I do a lot of Zoom meetings online. So don't be afraid to contact me. You can reach me at Thomas Young at 1stconsultantsinc.com. Just as right here, it says right there, First Consultants, but push it all together, firstconsultantsinc.com, and Thomas Young, and I will provide you lots of information and coaching with absolute mathematical proof. God bless you all. We'll see you here in a couple of days. I'm back, and we will be back on podcasts on a weekly basis. I'm going to move them to 11 a.m. So the podcasts are going to be more tuned to 11 a.m. a couple of days a week. And when I'm online, you get notified if you're online that I'm online. But God bless you, and we'll see you again in a couple of days.